Joining us now is Susan Akbarpour, the founder and CEO of Mavatar. Good to have you with us, Susan.
Thank you so much. Thanks for having me on.
So we have seen a bit of a cold winter for cryptocurrencies, evidenced by Bitcoin's further drop today. Has it found a bottom? Is $3,000 the bottom here? Where do you see it going?
I really don't think Bitcoin goes down further. Probably around the same price. However, Bitcoin really opened the door for cryptocurrencies and for the applications like ours to come to surface and use the digital currencies as a fuel of their applications. So utility tokens that, we're trying to define them in the market are really the tokens that allows constituencies of a platform to play a game at the cheapest price possible, because most of the traditional payment systems and banking fees and all those bottlenecks and back office services, they didn't allow many of the applications to really operate efficiently. I give you an example of sharing economy, for example. There are millions of transactions done between the constituencies of those ecosystems. A platform like Airbnb or Uber, they are involved and they are creating millions of transactions. They can in a matter of seconds. How the banking fees and infrastructure and traditional banking can respond to that, all of those fees and bottleneck services and back office services can be done by cryptocurrency.
But what's the argument? Because then you have to convert it back to US dollars.
Right. If
so that
we get
like
the federal agencies to actually accept the fact that the digital currency is the future, paper money was good for its time, but it's time to be able to track those currencies. What is probably a bottleneck, for example, for IRS, is like all of these transactions are getting done, and we're not going to know who is making what kind of revenue or income that we can, they can pay they fair share to the economy of this country.
Right.
If they are part of this economy, this new economy, for me as a technologist, I can actually convince IRS that we can add one line of the code to the smart contract on the blockchain that they can get their share in their wallet.
But then it's back to government regulation. It seems like that defeats the whole purpose of cryptocurrencies in the first place, if it does now go back to government regulation. But we mentioned cryptocurrencies as a plural, and that's been one of the big conversations here, that sure, there's room for one cryptocurrency, maybe three, but we've had the market flooded and saturated with seemingly another ICO initial coin offering every single week during what was the high of last year.
Yes, there are currently 400 exchanges in the world.
Well, how much room is there?
That you can take thousands of currency in there and change them to other currencies or fiat money, right? So that's not the problem of having marketplaces for exchange these cryptocurrencies to the money that you can go and buy a pack of milk. The question is, the problem with that cryptocurrency is the banking system and the infrastructure that we have in place has not been done for the
my question is, how many of these coins can survive? Because we've
as
seen
many as applications that we have. Look, Uber can have their own coin, but as long as we can exchange it to $1 or another.
But if you're going back to dollar or another coin, wouldn't you imagine that there'll be some consolidation in the crypto market, that maybe Bitcoin, maybe Litecoin, maybe Ripple, Ethereum, that there'll be like 10 dominant players that emerge after this initial high?
It's okay. Applications can also use these tokens, and actually they can use stable tokens as well, that their price are not fluctuating. The prices are always the same, $1, right? But it's trackable, traceable digital currency. I'm giving you, honestly, if IRS and all the federal agencies will be part of these new economy, they can actually be a player and they can track all of this, trace all of these transactions. And some would argue that that, in a way, defeats the whole purpose of the cryptocurrencies. But let's talk about the technology behind cryptos, and that's blockchain. Yes.
Because that has been revolutionary. Some are calling it the biggest discovery since the internet. Let's talk about some of the applications beyond cryptocurrencies that we're seeing blockchain being applied to?
Right. So blockchain practically is a smart contract between the parties to make sure every time that the value is transferred between these guys, or everything that they are imagining that need to be done between these parties has been tracked without an oracle, and it's completely decentralized, and all of these value transfer, distribution of the value is done automatically, right? So when that happens, and we don't need someone to sit down and create an Excel sheet and, you know, just like keep track of the ledger between 2, 3, 4 parties, that can scale that application. And there are many applications that they will need blockchain because there are a lot of back office services that today are done really inefficiently. So blockchain can come and create a decentralized network between all of these players, and then let them automatically to track of whatever is happening between them.
Right, and one of the most interesting applications, which is relatable to people, is what we're seeing Walmart doing with the way it tracked its lettuce suppliers in this recent E. coli outbreak.
Inventory management systems, right?
You know, and that is something that I think, you know, people can relate to, and it makes it a little bit more tangible than an application that's out there for cryptocurrencies.
Why don't I give you the best application of the cryptocurrency in our own system? Because we practically our technology makes the world around us shoppable. And what that means, everyone can create shoppable content that actually help the people to buy those items as soon as they see them. Like, let's say we allow the movie producers to make their movies shoppable. We allow the Vogue magazine to make the Vogue shoppable. Everything that you think you see in that content, you can buy now, right? But what happens, these guys are practically the influencers the new sales force of those products that they're selling for the retailers. And what happens, they need to get paid. So we're talking about 10 million transactions in a matter of seconds. Who wants to send the commission of those transactions to these people? Are we going to send a check to each of them? Every check that we're going to send to them can cost us $15 to $20.
Right.
But with the blockchain tracking all of these transactions on a decentralized network, pushing the attribution models to blockchain, and paying all of these guys with cryptocurrency that they can cash out to any kind of currency later on in an exchange like Coinbase and others, you know, that sending $10 million checks every month will be solved right away.
Right.
So those kind of economies in a scale cannot be possible with the current banking system.
All right, interesting stuff. Thank you so much. Susan Akbarpour, CEO and founder of Mavatar. Thanks for joining us.
Thank you so much for having me on. Thank you.